Good evening, everyone. Welcome to JAIIB English Medium channel. Hope you all are doing well. So today we are having our Indian economy, Indian financial. I hope you all are aware about this. We started the RAFTAAR series, and today we are going to discuss 12th session of this series. If you haven't seen the sessions of this series, then do make sure you go to the playlist section and watch each and every session of RAFTAAR series, because in this series we have discussed all those topics in form of MCQ which have been asked in the previous paper. So in the form of MCQ, we are trying to cover the whole IE IFS syllabus with the important topics, with the previous year questions asked topic, everything we are covering here. Okay, so do make sure you watch the recorded session. Earlier 11 sessions which we have conducted, you can watch a recording of it. It is available in the playlist. And from now onwards, if you are able to watch the live session, it's well and good. If not, then do every session's recording you watch. Okay, so let's start today's session. Today we are having a 12th session of RAFTAAR series, and the first question of today's session is about FDI. So question is asking which of the following is accurately describes the role of FDI in an economy. Question is asking which of the following is accurately describes the role of foreign direct investment in an economy. So first is like, what is FDI? First you should know what is FDI. FDI stands for what? Achha, before moving forward, do confirm me in the comment section is audio video both are okay. So I am taking your session live today. Do confirm once is audio and video both are okay. Are we good to go? So first of question is talking about FDI. FDI stands for foreign direct investment. What is this foreign direct investment actually means? When a foreign company wants to invest in the Indian economy, or it simply means when a company wants to invest in a company other than in their own country. Let's say whenever a foreign investor wants to invest in India, that will be called as a FDI. Okay, whenever Indian company want to invest in any other country company, that will be FDI. Foreign direct investment will be done in the foreign country. Okay, so first option is FDI primarily involves investment by domestic foreign entities to gain control over those entities. Second is saying FDI is an investment made by a foreign investor, often companies, in a country to gain control over ownership, which helps in maintaining high growth rate, enhancing productivity, generating employment. Third is saying FDI is a form of financial aid provided by foreign countries to support economic development in domestic industries. Fourth is saying FDI focuses on short-term capital flows from foreign investor to enhance immediate return without significant impact on economic growth or employment. Now you have to answer which of the following statement is correct about the FDI. Foreign direct investment. A, B, C or D, which statement is correct? Okay, so first statement is saying FDI primarily involves investment made by domestic investor. No, it will be by the foreign investor, not a domestic. Third is saying FDI is a form of financial aid. No, it's not a financial help. It's not a grants. The investment, it's a business. Whenever a foreign company investing in a company in the FDI, it means they are investing in the business. They are doing business in company. It's not a financial help. It's not a financial aid. It's not a grant. The business, whatever return the company will having, the certain percentage of that return will be taken back to the foreign country from where the investment. So it's not a financial aid. Now it focuses on short-term capital flow. No, it's a long-term capital. So right answer will be D, which says FDI is an investment made by a foreign investor, often companies in a country gain the control over ownership, which helps in maintaining high growth rate, enhancing productivity and also generating. All of these will be the benefit of FDI. So why it is so important? Why FDI is very important? Out of all the types of foreign investment, FDI is the much required investment, I can say, or FDI is the type of investment which actually gives maximum benefit to India. Like Many of times we have discussed about your Make in India program, in which I have told you that why Make in India program was introduced. So Make in India program was introduced for making India manufacturing hub. We wanted India to become a manufacturing hub. Manufacturing hub means the maximum production should be done in the India. And let's assume if we are producing more goods and services, what benefits out of it will get? More production will increase your GDP. It will increase your economic growth. When you are doing more production, you need more labor as well. So what is required? Your employment opportunities that will increase your per capita income. It will increase your national income as well. Okay. After that, you will find that more people are doing employment, having employment now. So the issue of poverty will be okay. So poverty will be reduced. Unemployment issue will be reduced in the country. And because people have money supply, their living standard will be high. Okay. If you are producing more goods and services, you will be capable of doing export of these as well. If your export increases, your foreign currency reserve is also increased. So in short, you will find economic development in the country, and that will be creating overall growth of the country. This is how the overall growth will happen, and that's what the objective of Make India. The same goes with the FDI. Like FDI gives us the capital. If we talk about our country, we know there is a scarcity of resources in India. Actually, in every country it happens. In every country there is a scarcity of resources. Whether it's a physical resource, whether it's a capital, or we can say financial resource, whether we talk about a human resource, there is a scarcity of resources. So because of which we need a capital, and Indian economy is dependent on the foreign capital. The more money we get from the foreign investment, the more production, GDP growth, employment we will be having in the country. So FDI is helping in every way for the development of our country. Okay, so right answer will be your B option. Right answer will be what? It's a B option. Now next we have the definition of FDI. You can see foreign direct investment is simply an investment that will be made in a country by the foreign investor. Who will be making this investment? The foreign investor will be making this investment in a certain company to get the ownership of an entity. Okay, and FDI have always been a key engine of economic growth. FDI is a what? It is a key engine of economic growth. It assists in maintaining the high growth rate. It enhances the productivity, generates the employment opportunities. So FDI directly, indirectly, in both way helping the Indian economy to grow, creating more job opportunities for the people, okay, and having a higher growth rate as well. So that's why FDI is called as a key engine of economic growth, of having high growth rate of country, increasing productivity, employment opportunity. Okay. Also, if we talk about FDI policy, a favorable policy, it should be a kind of policy which attract the foreign investors to come to India and invest. Okay, that kind of foreign FDI policy. Also, FDI is allowed in all the sector, whether it is defense, construction, broadcasting, civil aviation, plantation, private sector, banking, satellite installation, operation, credit information companies, also among the sectors that have been liberalized. They all will be allowed the FDI limit. A certain percentage, not every sector have a 100% FDI allow, but a certain percent of FDI is allowed each and every sector. Okay, and the more FDI is allowed, the more FDI will be creating more better situation for our economy. Okay, next question is talking about which two channels are used for foreign direct investment to enter the domestic economy. So there are two routes. Okay, there are two routes by which foreign companies invest in India. So what are these two routes? First is the RBI selective route and private sector. Second is saying international trade route and domestic investment route. Third is saying global market route and national development route. Fourth is saying RBI's automatic route and government route. So which of the following is correct channel by which foreign companies can come to India, can invest? What are these two channels? A, B, C or D? Which one is correct? So right answer will be your D option, automatic route and the government route. Government route is also named as a government approved route. Okay, automatic route, one route is automatic route, second is a government approved. So automatic route simply means no prior approval is required. In automatic route, there is no prior approval required. But after invest, like when a foreign company wants to invest in India, they don't need any prior approval. They can directly come to India and invest. But within 30 days of their investment, okay, within 30 days of this investment, the Indian company who got the foreign investment in the FDI, the Indian company have to report it to Foreign Exchange Department of RBI. First, they have to inform about what capital they got in the foreign direct investment. Okay, they have to give the capital amount. Second, they have to give the information to the Forex Department of RBI, like on whatever capital they receive from the foreign company, how much shareholding they have provided to the foreign investor. Okay, if anybody is investing in your company, you will be giving a certain shareholding to them. So how much shareholding you have given to the foreign investor on behalf of the capital you receive from the foreign direct. So these two information have to be reported to RBI Foreign Exchange Department within 30 days of the investment. This have to be done by the domestic, okay, who got the investment. Clear? Next we have government approved route, obviously. Acha, here prior approval required. Okay, without the prior approval of Government of India, you are not allowed to do foreign investment. So if any company wants to do investment in India and they want to come in a certain sector which is under the government approved route of FDI investment, then they have to give notice to the to the government, whatever department, ministry it includes, related to your investment sector. You have to take their permission. If they have given the permission, you are allowed to come and invest in India, otherwise no. Okay, so automatic route and government approved route or government route, these are the two routes by which foreign companies can come to India and invest in with the FDI. Okay, do remember that. Now those sectors which are very risky in terms of interest of the country, like certain sectors are there, like defense. Defense is a very risky sector. So government will always be allowing the government approved route for the investment in the defense sector, so that government will know like which company is coming to the defense sector and for what purpose they are investing in India, what they are going to do actually in the defense sector. So that's why those sectors which actually include such kind of risk for the economy, the government put them in the government approved route. Okay, so right answer is D. And you can see routes of FDI in India is automatic route and the government. These two routes are there. Next question. What was the original purpose of creating a special drawing rights, SDR? So first of all, SDR is a special drawing rights. It was created as a supplementary global reserve. So what happened? The Bretton Woods Conference used to have a fixed exchange rate system. Okay, Bretton Woods Conference used to have a fixed exchange rate system. And after Bretton Woods Conference collapse, Bretton Woods collapse, the fixed exchange rate system converted into floating exchange rate system. Now people started doing trade in the floating exchange rate. Okay, and at that time we needed an international reserve. So IMF created SDR. Okay, who created SDR? IMF created the SDR. So what was the original purpose? Of the following will be right for that. First is to serve as a primary international currency, manage the international trade agreement, to act as a supplementary international reserve asset, or to enforce global financial. So out of these four options, what do you think, which one is correct related to primary, or we can say the original purpose of introducing? So SDR is also known as a basket of currency. It have 5 currencies. It is also known as basket of currency and it have 5 currencies: US dollar, euro, yen, pound and renminbi. The latest added currency is renminbi, which was added in October 2016, China's currency. So this is the 5 currencies, basket of currency SDR is known as. SDR is also a unit of account of IMF and other international organizations. And the purpose of introducing SDR was simply to create a supplement national reserve asset after the breakdown of Bretton Woods. Okay, so right answer is C. The SDR was created as a supplement to national reserve asset context of the Bretton Woods fixed exchange. So what happened? The Bretton Woods collapsed 1973 and we shifted to major currency to floating exchange. It was a fixed exchange rate system. From there it was changed to floating exchange. And the lessons the reliance on the SDR as a global reserve asset. Then the SDR came into the picture. Okay, so SDR serve as the unit of account of IMF and other international organizations, and it is neither a currency nor a claim on the IMF. Okay, also it is potential claim on freely usable currency of IMF members. SDR can be exchanged for these currencies. So SDR was what? It was initially defined as a certain grams of gold, but then it was compared to $1, and it also named as a basket of currency which have 5 currencies. Okay, how many currencies are there? 5 currencies are there: US dollar, euro, yen, pound, and renminbi. And the renminbi is the latest added currency that added in the year October 2006. Okay, next, expand FRBM. What is the full form of FRBM? So FRBM is a very known type of act now, because when we talk about FRBM, it was introduced for the purpose of making financial discipline. Okay, it was introduced for the purpose of making financial discipline, and also it was focusing on making sure that the government will be not taking a lot of loan or borrowing from the market. Okay, so first time this act was introduced in the year 2000 by Mr. Yashwant Sinha. He was the finance minister at that time. Then in 2003, this bill was passed and it became act. Okay, and in 2004 it became effective. Okay, in 2004 it became what? It became effective. So this is how the FRBM Act introduced the country. So the statement, the full form stands for Fiscal Responsibility Budget Management Act 2000. This is the FRBM Act. It was created to control the borrowing of the government, to create a fiscal discipline in the banking sector. To the government. Okay. So right answer is D. And Fiscal Responsibility and Budget Management Act enacted in 2003 by the Indian Parliament and it became effective on 5th July 2004. The main objective is to reduce fiscal deficit and to eliminate the revenue deficit. Next question we have: how reducing of reserve requirement for banks by RBI should ideally impact the Indian economy? How it will impact the Indian economy? First, it should lead to increase in money supply in the economy, should lead to decrease in money supply in the economy, should lead for more investment in the economy by corporate sector specifically, less investment in by the corporate sector specifically. So what do you think? Which one is correct? A, B, C, or D? So reducing reserve requirement, what actually the reserve requirement means? Reserve requirements that CRR and SLR. They are the reserve ratios that was introduced by RBI, CRR and SLR, which all the scheduled commercial banks mandated have to maintain a certain reserve with RBI and with themselves as a percentage of their NDTL, which also be defined by the RBI. So reserve requirement is CRR SLR. Now RBI reduced CRR SLR. So right now CRR is 4%, SLR is 18%. So now imagine RBI reduced CRR to 2% and SLR to 10%. For example, just imagine. In that case, what happens? Banks have to make lesser reserves. Bank will be having a more liquidity because bank have to maintain less money with reserve, they will be having a more money below, so liquidity is more, bank will be giving more loan, okay, and the public will be having more. So it will do what? It will increase the money market, not decrease. And sector specific is not SLR. So right answer is A. It will lead to increase the money supply. Okay, so this is the easy monetary policy, or we can call it a expansionary monetary policy as well. So when RBI expansionary monetary policy, it means RBI will reduce the monetary policy rates, which will enhance money supply. So once RBI reduces the reserve requirement, it will be increased money supply in the economy. Right answer. Okay. What is the primary objective of microfinance institution? What was the primary objective of introducing microfinance institution? First, to reduce NPA of existing commercial banks in order to reduce some of their burden. Second, to cater to the rural sector which generally lacks financial assistance. Third, to promote financial inclusion and alleviate poverty. Fourth, all of the above. So, which of the following is the primary objective of microfinance? A, B, or D? Okay, so microfinance institutions was introduced to fulfill the requirement of poor and low income households. Like not every person is capable of taking banking services from the commercial, because they have a certain criteria and certain rules, regulations. So now there are certain families, certain households, certain persons who used to be called as a disadvantaged population. Why? Because they were not able to get the benefit of financial system. That's why they were called as a disadvantaged population. And to provide them the capital, we have introduced financial microfinance. Means it was introduced to promote the financial inclusion and to alleviate the poverty from. Right answer is, okay, right answer will be what? It will be C option. It promotes the financial inclusion and it alleviates the poverty. Okay. You can see microfinance is a form of financial, provide a small loan and other financial services to poor and low income households. In an economic tool, it is an economic tool designed to promote the financial, enable the poor and low income household come out of the poverty, and their living standard will be also improved. Okay, so poor and low income household means what? Those households whose annual income is up to 3 lakh, not more than 3 lakh. They will be called as a poor and low income household, and to them the loan will be provided by the microfinance. So microfinance consists micro savings, micro credit, micro insurance, and micro. And the micro insurance limit is up to 50,000 or less than 50,000. Okay, this is the insurance limit under the microfinance. Here, next we have, which among the following is not at all related with the section 17 of RBI Act. So section 17 of RBI Act talks about what are the permissions that have been given to RBI to perform, like what are the activities that RBI can perform. Okay, so first is demonstrating economic viability of the new branch. Second, meeting minimum capital requirement specified by RBI. Third, securing consent from other banks operating in the area. Fourth, obtaining approval from the local government authorities. Which of the following is correct? A, B, C, or D? The right answer will be simply securing consent from other banks operating in the area is not related to 17. As I have told you, RBI Act 1934 section 17 talks about the businesses which are permitted to be conducted by RBI, like what functions, what business RBI can conduct. So you can see the first statement saying acceptance of deposit without interest, RBI can do that. Second says that purchase, sale of foreign exchange securities, rediscounting of bills and promissory note, granting the loan to banks, that can RBI do. RBI can also accept the deposit from the banks which RBI will be paying interest to them. That's a part of SDF, standing deposit facility. Okay, and it was approved by the central government. But it will be only allowed when there is a liquidity management requirement in the country. Then only RBI can accept deposit from the banks or other person in which RBI will be paying interest to them. Okay, otherwise RBI do not pay interest to it. Okay, now a brownfield investment. Next we have what? Next we have a brownfield investment in the banking sector. So we are doing a brownfield investment in a banking sector, involves acquiring and dash bank or financial institution. This approach allows the investor to leverage the established infrastructure, customer base and regulatory approval of the acquired entity, that facilitating a faster market. Okay, so which of the following is correct for the brownfield investment in banking? So if you remember, we discussed in our classes two types of investment like this. One is greenfield investment, one is brownfield investment. So greenfield investment simply when you are investing in a new business. Greenfield investment means investment in a new business, in a new entity you are investing. Brownfield investment means in an existing business you are doing it. That's a brownfield investment. Okay. So brownfield investment in banking sector involves acquiring cash, bank or finance. What? In new bank or financial institution, existing bank or financial institution, both or none of these. So as I have told you, greenfield investment means investment in the new entity, in the new business. But brownfield always means investment in existing business. So if you are doing a brownfield investment in banking sector, it means you are investing or you are acquiring existing bank or financial. So right answer will be next. Merchant bankers are the banks who actively engage in what? So merchant banks actively engage in which of the following activities? Also, merchant banking and the merchant bankers are the only type of bankers and banking are regulated by. All the other types of banking comes under RBI, but the merchant banking comes under C. So first is saying security trading, investment banking, with derivatives, investment advisory services, all of the above. And the right answer for this will be all of the above. All of these services will be provided by merchant. So what merchant banker do? They provide advisory services to their corporate clients as well as to the wealthy individuals. Okay, so right answer is D. And you can see the definition. Merchant banking primarily involves providing financial advice and services to whom? To the large corporates and to the wealthy. And their definition have been given by Ministry of Finance, which Ministry of Finance says that any person who is engaged in business of issue management by making arrangements regarding selling, buying or subscribing to the security as what? As a manager, consultant, advisor, or if a person rendering corporate advisory services in relation to such issue management, that person will be made as a or will be called as a merchant bank. Okay, so this is the definition of merchant banking. Now, with reference to balance of payment account, consider the following statement. So balance of payment is simply a systematic record of all the economic transactions between India and rest of the world in a one financial. So whatever economic transaction India and rest of the world is doing in a one financial year, making the systematic record of that is known as your balance of payment. Okay. Now when we talk about this balance of payment, it have two types of account, current account and capital account. Now, first is saying the all transfer payments are part of the capital account of balance of payments. Second is saying that the fully convertible in both the current account and the capital account for all transactions. So you have to answer which of the following are correct. Which of the following statement are correct here? A, B, or D? Okay. So first of all, the current account is only the type of account which is fully convertible. Capital account is not fully convertible till now. So this is wrong. All transfer payments is not a part of capital account. So right answer is neither one nor two is a correct statement. Okay, it means both the statement about the balance of payment is wrong here. Right answer will be D. So this was today's session in which we have discussed 10 questions with the explanation of the topic of IE IFS. Okay, so first let me know in the comment section that how many answers you have given correct here. Also let me know if you have any doubts. Okay, so now if you haven't started your preparation for May 2025, still you can start and clear all the 4 papers of your JAIIB. But yes, you have to put more efforts, you have to give more time to your preparation in comparison to those who have started in last 3 months or from the last 2 or 4 months. Okay, so we have a selection batch, recently started comprehensive batch. This is the last comprehensive batch for this session. Now apart from that, in the next month we will be having our crash course, our revision batch available for you. So what you have to do, simply are the Mahapack. Once you enroll in the Mahapack, you will get all the comprehensive batches, you will get all crash course and as well as all the revision batch for all the 4 subjects. So what you have to do, you have to enroll in Mahapack for that. So first download the 24/7 application, because this application gives you 1% additional discount. So download the application, go to the home page and select the exam category JAIIB CIB, then go for JAIIB May 2025. We will find all the important batches here. Okay, all the batches will be available. So what you have to do, my suggestion is go with the Mahapack, because it will give crash and revision batch as well. Click on the batch Mahapack. You can see live classes, mock test, ebooks, video courses will be there. When you scroll down, you have all of these information of Mahapack. If you enroll in the Mahapack, you will get all these benefits. If you enroll in JAIIB Increment Mahapack, you will get all these benefits. So what you have to do, simply click on the buy now option, enter a code here, that will be Y496 and apply. So once you apply, you will find here 80% discount, but 1% additional discount will be given to you if you purchase from our 24/7 app. So download the application from Play Store and use the code Y496. You will get a 1% discount plus 1 year validity from this. Okay, so this is how you can enroll in the Mahapack. And if you want to go with the individual comprehensive batch, the same process is there. Click on the selection batch, go to the buy now, use the code Y496 on application and use the coins in the application. You will get 81% discount that also. Okay, so this is how you can enroll. So start your preparation from today onwards, because if you start your preparation, there is still a probability that you can clear your paper. But if you still keep thinking about it, what to do, I have not started preparation on time, what next have to be done, everything, if you are thinking about it, definitely you will lose your time to prepare. Okay, and you will risk your attempt. So do not wait more. Subscribe, enroll soon, so that you will start your preparation as soon. Okay, so that was all for today. Now let's end the session here, and last but not the least, all the very best for your preparation. If you need any help from us, we always be there for all of you. You can ask in the comment section to us whatever your queries are. Also, do make sure you subscribe the JAIIB CIB English Medium channel, so that all the upcoming sessions link will be provided to you, notification will be provided to you, and you will link with us your preparation so that mini marathon, Maha marathon, any important session we will be conducting available to all of you. Okay, so do make sure you stay connected. Okay, so let's end the session here. See you all in the next class. Till then, take care everyone. Thank you for joining the class.